What is going on, guys? Dom here from Clover Trading, coming at you with another video. Today, I'm going to be talking about 5 things that almost every 6 or 7-figure trader I've ever met has had to put at the forefront of their focus to either gain consistent profitability for the first time in the early stages of their career. They've had to do these types of things to find that consistency and get them going in the game. Or for the intermediate or advanced traders out there, these are the things that if you start to forget about, get lazy with, can lead to drawdowns or big losses. So, another way I could put this is 5 things that if you're not doing them could be the reason you're not a millionaire trader just yet. If you guys have not already, make sure to subscribe to the Clover Trading YouTube channel. Hit the like button on this video before we get started and leave a comment if you are struggling, if you're going through hard times in trading and you're not doing these things. So let's get into the video live from Acadia National Park. Something that I think is hindering a lot of traders' ability to become 6 or 7-figure traders is trading too often and taking far too many trades. And I think this is a reminder for a lot of intermediate or expert traders, as well as right now we are in the midst of summer trading where there's a lot less liquidity, a lot less volatility, and just in general, a lot less action. So just being able to separate, summer trading from fall or winter trading or sector momentum, when there is a lot of that volatility and range, there's a lot of eyes and attention on the market, and we have that volume, and being able to differentiate between the two. But right now, especially in summer trading, I see so many beginners and intermediate traders who are just trying to sit there and trade all day. If they're trading one pattern and it's a multi-day breakout, all of a sudden they're trading random first green days or first red days, or they're trading CVNA or big caps like Tesla or the SPY. And at those moments, you're not trading your system anymore, you're far away from it. And because you're over trading, you're making that margin for error a lot smaller because you're no longer trading your system that got you to where you want to go, and which is a consistently profitable trader on his way to 6 or 7 figures. So really being able to hone in on your system and taking fewer trades and allowing that the quality of the trade to go up and only trading those versus trying to trade more and more trades to get you out of the pickle that you're in. Another self-sabotaging trait of beginner and intermediate traders is that they're not studying enough, or they quit studying altogether once they start to see some consistency or some success. And, studying is really going to transition and change as you start to make more money in the markets. At first, it's putting your head down into the screens and watching DVDs, stuff like trading tickers, and watching webinars, watching video lessons, watching YouTube videos, as much content as you possibly can to really hone in on that one system that you're going to learn how to trade. Eventually, once you start to make more money, it's going to be studying the markets, the trends, the patterns you're trading, their overall performance, your edge tracking stuff. And you're going to be more studying, your own personal results with the market so you can continue to make as much money as possible and exploit your system to the best of your ability. This really hit me pretty hard in 2019. After a few years of profitability, I made a lot of money. I was trading OTCs really well, milking my one pattern. And then all of a sudden, the OTC market shut off and I was kind of left out in the wind with no strategies and no real understanding of listed stocks because I had stopped studying. I got complacent, and who knows how, it took me another 10 months to figure out listed stocks, how much quicker I would have been able to figure it out if I had stayed studying, stayed on that path of building my education account while I was building my real account. Another thing that I think is keeping a lot of traders from reaching those 6 and 7-figure profit goals is having too many patterns too early in their careers. Most of the millionaire traders I know started off with one system, they mastered it, they studied it all the time, created an edge within that system, learned all the nuances of it, and made their first 100K or more, or maybe even their first million off of one pattern. In the beginning, your job really is to minimize the margin for error or maximize the margin for error, allow yourself to mess up a lot, but still be consistently growing and become consistently profitable. It is very hard to do that when you have 3, 4, 5 different patterns you're trading with a small account and your focus is kind of everywhere. Roland Wolf told me early in my career when I was trying to learn new systems too early, when I had already had a profitable system with OTC breakouts, he told me, milk it until it's gone. And then, once you have a bigger account, a lot more room for error, then bring in new patterns. And there is going to be a time and a place to add more patterns. A lot of those traders that are millionaire traders now have 3, 4, 5 different patterns. And, as you progress through your career, you're going to have a bigger account. You're going to exponentially grow. You're going to gain a lot of experience. You're going to meet a lot of new traders who can help you with their patterns. So I think that's something I think is causing a lot of people to lose ground and maybe stay stagnant for a while, is they have too many patterns too soon. Something else that I think is sabotaging a lot of traders' potential is understanding the value of risk management. And risk management to me isn't just, cut losses quickly or cut at your risk level, but it even means to me having the right plan, understanding where to put your risk level and why based off of hundreds and hundreds of different examples in the stock market, and then actually coming through with a system that says, I'm going to cut when the stock price goes below or above this level, and having the discipline to do that every single time, and even having the discipline to follow that trade plan where, because For me, when I run into the biggest issues with my trading is when I have a risk level, it's based off of a lot of right information, but I don't hold to it. I cut a little bit early trying to save myself a little bit of money, and then it holds again and proves to me that was the right risk level. And then stock bounces back, I get back involved, and I just am trading inside of a range where the stock's not really doing anything, but it hasn't broken my risk, but yet I'm taking all these paper cut losses. So to me, that falls into risk management as well. But risk management is also, from the beginning, and even when you get into intermediate trading, just not allowing yourself to blow up, not putting yourself in the position to lose way more than you're willing to on any given trade, because no trade is worth blowing up or putting yourself in a disastrous situation. So understanding the value of risk management and what that can do for you over the course of years in this game, I think is paramount. Another thing that I think might be holding back a lot of you from reaching your full trading potential, eventually hitting those 6 and 7 figure milestones, is not tracking your performance. And for me, there's always been kind of a direct correlation between when I'm tracking, when I'm putting a lot of work into my spreadsheets, and how well I'm doing over that course of that week, that month, that year, whatever it is. And when I get lazy and don't do it, I definitely can see myself struggling because I'm unable to recognize trends in my own performance. You don't need to get super in-depth, have a million different spreadsheets to go over your tracking. But for me, the important things is what I'm making or losing on each trade, what I've made or lost every single day and every single month. And then, which pattern does each trade go into? What's the rough P&L, the average winner, the average loser for that setup? For me, that's enough information to be able to draw a lot of the important conclusions that I need in terms of winning percentage, how often am I green each on a daily basis throughout the month, risk reward, what type of risk reward I'm getting per setup, where are my big losses coming from? These are all questions that I need to answer, and the solutions are going to be in the numbers. For me, towards the beginning, tracking is what led me to just trading one particular setup, which was OTC breakouts, and eliminating everything else I was trading, because eventually the numbers were telling me I was consistently losing money at all the other setups I was trading. I was very, very profitable on OTC breakouts. So sometimes it's, simple tracking is enough just to tell you where you're losing, where you're winning, what setups you need to focus on maximizing, and which ones you might need to either work on or completely drop for the time being. There are some sites that are out there that can help you track and do it a lot easier. Kinfo is one that I started using recently. I think all the Clovers are using it, which it tracks all this information for you automatically. You don't need to go and build any spreadsheets. But besides that, I really do it every single day. I just keep a running Google Sheets, every trade I take, what pattern it fits into. If I want to go back at the end of every month, do some edge tracking, I can, and give myself a little more information on how I'm doing so I can make adjustments going into a new month, a new quarter, or a new year.